Hello everybody, welcome to Market Masterclass, and we're going to look at some straightforward investment guidelines under the auspices of the Dummy's Guide to Investing. And we're going to start with making sure your own house is in order before you make any decisions about investing money. You might have mortgages, you might have loans coming up, you might have a holiday, school fees planning. There's many reasons that you need to have money ready in the bank for your everyday needs. So make sure your house is in order before you put some money into investment. You've got to be very clear on what your objectives are, what your visions are, because that will dictate the time that you're going to invest your money for. Is it for a retirement in 10, 15 years time? Is it for school fees planning? Is it to buy a property in a year or two? Obviously, the shorter the time period, the less risk you want to take. The objectives and visions are very important because that will dictate the type of investment you will consider before you place your money there, because equities take longer to give you returns. You might be lucky, but normally they say a minimum 5-year period for investing. So all those are very, very important. Your time allocation in terms of how much time are you going to spend actually looking at the investments that you're going into, or are you going to allocate it to a broker who's going to keep an eye on things? The basis is you need to do a lot of research. Question and scrutinize everything that you hear about from your friends or brokers or fund managers that you might be talking to, or your search on the internet. That's all very important. Question and scrutinize everything. You don't just want to get in as a sheep because everybody's going into that type of investment. There might be a big change in the markets. There might be some new news coming out. So don't be a sheep. Don't idolize some investor that you know who's made a lot of money in the past, because things change. They might have made money now. Are they making money now? Things change, so don't idolize somebody, and don't make an emotional decision about getting into something because you particularly like gold mining, so you just go into it because you feel good about it, because you just bought some gold last week. So those are the sort of things that can affect you. Risk profile. Are you risk averse? How would you get into some risky investment? If you're going longer term, you've got an opportunity to get into something a little bit more risky. But how do you feel if you're invested in something risky? Risk adverse, you can relax and things will tick along quite slowly but quite nicely. High risk could mean some high returns, but it also means that you're also exposed to more potential loss. And that's also obviously wrapped up with the time that you're going to invest for. So overall, you don't want to be overconfident about everything and feel that you know all the answers, because things will change. When you go into something, you make that decision, be confident. Once you do have the confidence, then that is the time to go into the investments that you've made a choice for. I hope you found that useful and interesting. Bye for now.